Time with Simon. So let's just get right into it. You published a model on Tesla. Its shares have been absolutely skyrocketing post-election. Everybody wants to get in Tesla, believing that there's going to be favorable regulations to the company and Elon Musk in kind of Trump's cabinet. But you actually kind of have some numbers behind where you believe Tesla could be headed in the coming years. So could you kind of walk through kind of the reason that you built this model, first of all, and then also kind of the inputs that went into it and where you think Tesla shares could be if they kind of deliver on some of the Robo taxi programs they have?
Sure thing. Yeah. So first of all, Eric, everybody has an opinion about Tesla. The model was built because everybody has an opinion on this company and the stock, right? Your grandmother has an opinion on Tesla. My dog has an opinion on Tesla. Everybody says it's either the greatest thing in the world or they hate Elon and they think he's becoming too political or whatever else it might be. And so the reason for the model in the first place was to say, okay, as investors, somebody's got to do this. Somebody's got to put the numbers, onto the page and say, this is what the company can really be worth. And of course, it's impossible to know for sure how things are going to shake out for Tesla to 2 decimal points. But I think that using reasonable inputs, based on the company's historical manufacturing capacity for the cars, the expectations of the future revenues and the cash flows that are associated to those, and then also, of course, some of the other projects that Elon has committed to, we can get a pretty good feel for what the shares are or could be worth versus what they're selling it today. So that was the reason for the model. To answer the second part of your question, Tesla is a complex company. There's a lot of wheels turning, pun intended, of course, on that one. And first of all, it's a car company. You can kind of model out how many vehicles it's going to sell of each type. What's the average selling price of those? You can kind of roll up revenues and cash flows from those, especially as it's becoming more and more automated. But it's not just a car company, right? It's actually finding ways for these vehicles to incorporate recurring revenue that falls very quickly to the bottom line. If you've got a Tesla vehicle that has full self-driving software, they're charging $99 on a standalone basis for that now. You used to be able to buy it up front. Now it's kind of a recurring revenue piece of the business. And then we'll talk a little bit about the Robo taxi network and how that could be even bigger than anything that Tesla has today, even as a car company. So kind of put all of those together. It took me a solid month to build the DCF model, the discounted cash flow model. But somebody had to do it, Eric. And so I was glad to do it and put it out there for 7 investing.
Okay, so let's maybe break this down a little bit more. I had talked about Tesla in one of our earlier podcasts. I had said I was just a little afraid of some of the uncertainty. I passed on adding that to the portfolio. I wish I had, because it's up 70% since then. But let's talk about the input. So what do you value Tesla on just as a standalone car company? And then we'll build in the other factors.
Sure. And so again, the inputs for these, what we're trying to do is we're trying to forecast out all of Tesla's revenue. The most important piece is how many cars is it going to sell? What's the selling price of those? And then how long is that going to continue? Right. And we've seen, that's incredibly complex to even figure that out. Right. There's a lot of competition going on in China. Now they're introducing the Cybertruck. How well is that going to sell? We're talking about the Model 2, Cyber Cab, Project Redwood, whatever you want to call kind of the mass market vehicle. But I think we put some pretty good inputs together on just saying, as a car company, here's how many Tesla's going to do. Here's the capacity of its manufacturing that it has right now. Here's the CapEx I think it's going to expand the manufacturing that it has available. And then here's the new models it's going to introduce. How into the weeds would we like to get into that, Bleeker? I can give you kind of the higher level if you'd like, or we can kind of get into the nitty gritty if you want.
But I believe you have a specific number, and it's maybe changed. But when I last looked at your model, it was a little over $100 just for the car company. So is that where you're at today? And what kind of inputs did you get there in terms of number of cars sold or other important factors?
Yeah, that's right. So the previous we're in the third quarter now. We just got third quarter reports from Tesla. Before this quarter, so one quarter again, Q2, they were having some problems with stockpiling inventory, specifically in China. They just weren't selling as well as they were expecting to. There was kind of, it was a little bit more pessimistic than we've gotten used to in Tesla's quarterly reports. And earlier this year, I said, as you just alluded to, that Tesla as a car company was worth about $105 a share, which was quite a haircut from where the shares were trading. I think it was around $200, $250 at the time. Basically saying that if it's just a car company, it's worth half of that. They increased that number. We got much more optimistic news here in the third quarter. They sold pretty well. They exceeded the guidance that they had for the Model 3. Cybertruck is selling better than expected. I think as a car company, Tesla's worth $141 a share.
Okay.
Eric, that's still a lot less. That's about half of what the shares are selling at now. But you can kind of see this is still a very difficult business when you're clawing it out with your competitors and just trying to sell cars and do a lot of the marketing and the expenses that are required to get them out there. Low margin business, the auto.
Yeah,
business.
and I'm thinking about this offhand. So these aren't exact numbers, but if you're at 141 per share, that's probably what, 350 to 400 billion in that range valuation. So that in your base case with automotive, without the factors of self-driving kind of flowing through, I believe that still makes them the most valuable car company in the world, correct? Toyota is somewhere 250 billion to 300 billion. I'm not sure at this moment. So that would still make them the most valuable car company, right?
Yeah, absolutely. And, this is kind of with some assumptions on top of how well they're selling right now, right? We've already seen the Model S and the Model X and the 3 and the Y, and even now the Cybertruck selling well. I expect in my model, I think by 2026, so about a year and a half out from where we're at today, we're gonna start seeing 25,000 Tesla semis hitting the roads.
Okay,
that will be included in the car business. This is commercial freight. This is like Pepsi. They've got kind of a beta partnership. It seems like those are going well. I think that's going to scale up to 50,000 units by fiscal 2027. And then the big question, Eric, is really how well is the Model 2 going to sell, right? Can Tesla really get a car out there that's going to sell for $25,000? I think that Elon's going to have to make a decision on whether he wants to hit that price point or if he wants to get production earlier at a higher price point. I think it's very, very difficult to get a mass market car with the way he wants to do it, with the battery range and all the other components he wants to put into these vehicles. I think that he's going to sell it at a higher price point, just like we saw with the X and with the 3, and also with the Cybertruck. I think the same thing's going to happen with the Model 2. But I expect 500,000 units by fiscal 2026 end of year, 1 million units by fiscal 2027, and then scaling all the way up to 3 million units by fiscal 2030. Elon tends to hit inflection points pretty well. Don't hold him ever to exactly the date he's first going to say of when stuff's going to be available, but the dude is a genius operationally, and he is going to push up the scale for this quite significantly.
And can I just, one point of clarification, when you're saying 3 million units, is that across the entire business for Tesla? Is that the business-wide number? Or are you talking the Model 2?
Model 2, 3 million units alone by fiscal 2030. I think 6.3 total units, 6.3 million total units in that same year. And I've forecast all the way out to 2040. This is a company that I think is going to get to 9.5 million vehicles per year by 2040. That sounds crazy right now. We're at a little less than 3 million per year today for Tesla, but I think that they're going to continue to build more gigafactories, continue to incorporate the technologies, and I think that they're catching on quite well internationally as well.
So if you have the model in front of you, so what's your kind of year by year, 2024, 2025, let's just walk through where you see them going on a car business.
Yep, sure. Total output, total deliveries for 2024. We're at right now 1.7 million 2024. I think in 2025, next fiscal year, that goes up to 2 million vehicles, 2.6 million 2026, 6 million by 2030, 2035, 8 million, and then kind of hitting more of the plateau at 9.4 million in 2040. About half of those would be from the Model 2, because I think that really the true inflection point is going to be when you have a mass market vehicle that can compete with something like a Honda Accord or a Toyota Camry that has got full self-driving, fully incorporated, and completely autonomous. This has been kind of the holy grail that Elon's been trying to get to, not only for his own business and the economics that are so important of unleashing that for Tesla and the cash flows, but also this is, I think, what people want, right? I think that people want a fully autonomous car that not only you can get for $25,000, but can make money for you if you send it out to give other people rides. I mean, it's kind of, a really important inflection point of the auto business.
And you probably have, 3 million Roadsters per year by 2030?
No, the Roadster is in the history museums at this point.
So before we move on to, the self-driving pivot, because I know that's a bigger factor in your model, I'm just curious, what are kind of, when you are looking at the risk factors of this model, what are kind of the 3 risks you're most worried about not hitting those numbers that you've put all the way through 2030 and beyond?
Yeah, I mean, the biggest risk of all is going to be the Model 2 just doesn't get the kind of volumes that it needs to. This is something that's a big bet. We know that it's a big bet. Elon likes to take little bets. The Tesla Semi, 50,000 units a year, 100,000 units. That's not as big as something that Elon wants to get to 3 million or even 5 million units a year with the Model 2. So is that going to sell and become one of the best selling, small size sedans in the auto market? There's the expectation that it will. If it doesn't, that's a big risk. And then the other big key risk is Tesla actually going to get regulatory approval for fully autonomous vehicles nationwide or internationally? This is why Elon is so interested in politics right now. He's not just doing this because he's bored or he thinks it's fun. There's a reason he gave $100 million to President Trump's campaign. NHTSA, the National Highway Traffic Safety Association, federal government division, it controls safety of trucking fleets and everything that goes on the highway. Kind of a boring division for so many decades, Eric. Now it's like the most exciting thing of all that's going to allow or not allow and have the regulations for full self-driving vehicles that would be on highways nationwide. Stuff like that is super important for Tesla's future.
Yeah, and you saw a big jump in Tesla shares earlier this week when we were recording this, based upon reports that the Trump administration is going to streamline some of those frameworks. So what you're talking about, we have very real things happening around it. So let's make the pivot over to self-driving. I have a Tesla. I took 2.5 hours of drives yesterday. It performed great. I've been very impressed with kind of the step change in functionality around self-driving the past year. They're at, I believe, a $1.2 billion run rate in revenue for that business. But you actually, I don't want to put words in your mouth, but I believe last time I looked at your model, you had self-driving as a bigger contributor to the value of Tesla than actually their automotive business. So is that still true? And could you walk through what you put in your model to arrive at that?
And by the way, you nailed it. Right around $1 billion to 1.2 for the subscription revenue tied to the full self-driving. Like you said, $99 a month. When you calculate that out, there's about 6.7 million Teslas on the roads right now globally. About 7 million Teslas. That's kind of awesome, right? When you think about it, 7 billion people, 7 million Teslas, 1 per 1,000. I mean, that's kind of amazing that they've already accomplished that. Mm-hmm. But about 10% of them, right, have got the full self-driving subscription, right? 672,000 have actually gotten or beta tested the full self-driving. I think that increases pretty significantly. We're still in beta testing mode. We're still in early adopters. I think the mass market is going to get more comfortable with full self-driving in the next couple of years. But there's two pieces to this, right? The first is just the subscription that you get, right? Tesla's got to put a lot of money into the neural networks. It's buying the NVIDIA H100 chips. It's got some pretty hefty electrical consumption for the computing required for these things. But at the end of the day, you get a car that drives itself, and you've got somebody that's paying you another $100 a month for the service. So that's the first piece. It's just the subscription revenue from the full self-driving software. The even bigger piece, though, the even bigger than the subscription revenue is going to be the Tesla network, the Robo taxi fleet. The Uber comparison of whether you can replace a human driver in a taxi or in an Uber with a Tesla vehicle that picks you up and brings you exactly where you want to go. And if you can get on an app with Tesla and book a ride and it picks you up using somebody else's car that Tesla doesn't even own the fleet for, Tesla's going to be getting a cut of every single one of those rides. And I think that, quite honestly, Eric, that is going to be a very significant driver of this business going forward. It's probably the reason that Elon is so interested in getting the regulations to work in his favor for autonomous driving. Yeah.
So let's walk through the inputs. To what valuations you have? We could combine self-driving and their Robo taxi network. But what valuation do you have this at, and what kind of inputs did you have in your model to arrive at that valuation?
Yep. So first of all, I don't think this is going to happen any sooner than 2028. Here we are coming up on fiscal 2025. I'm saying at least 3 years to figure this out. This isn't happening next week or next month or next year. You see a fleet of autonomous Teslas just driving around and picking everybody up. It's still going to take time. But with the assumptions that I have, I think by 2028, there's going to be 21 million Teslas in total on the roads. And I think a quarter of them are going to have full self-driving capabilities, right? So let's call that 5.2 million full self-driving subscriptions. And of those 5.2 million that even have the full self-driving activated, I think 2% of them are going to be part of the full self-driving Tesla network that is autonomously picking up people, right? So only 70,000 vehicles out of 5.2 million and 20 million total Teslas out there. Pretty conservative assumption. But then you can kind of, start modeling out, well, what is that worth? If these 70,000 cars are out there driving around, let's say they're putting on average 50,000 miles per vehicle every year. Let's say that it costs $1 per mile for the rider, about half of what you'd be paying for an Uber right now, because there's no manual labor, or not manual labor component. Nobody's actually driving. A human being is not driving it. And let's say that Tesla takes 20% cut, a take rate that goes to Tesla of every one of the rides, kind of on par with what Uber is right now. I mean, you add all of those up, that's a $700 million a year income stream to Tesla in the first year in 2028. And that's modest, right? Yeah. 700 million is nothing compared to $100 billion that Tesla's making right now per year on the vehicle business. But I see that growing quite significantly up to $355 billion per year from the robo-taxi network by 2040. And then kind of there's a lot of assumptions in between there, but just to show you how big of a business this is, Eric. And then also that's throwing off a lot of cash flow too, because in addition, there's some upfront costs, right? You got to get the vehicles out there. You got to have the neural networks. You got to have the NVIDIA chips in there, the computing, the electricity and stuff. But after you get it a critical mass, this is a real cash compounder for the business, which is a huge part of the valuation of the stock of what it could be worth.
Yeah. What kind of margins you have that at if, you're looking at and saying, 355, is it 200 billion profit on that? Or where's that number fall for you?
So I've got them all discounted back to the future, right? And so we can get into I should have this right in front of me to show you to answer your question, but to show you the price per share of what I think this is worth. I think that we said earlier, I think the car business is worth $140 per share.
Mm-hmm.
I think the assumptions I put into the full self-driving software, not the robotaxi, but just the software itself, are worth $98 a share. So another $100 a share on top of that. And then I think that the robotaxi network, when you discount all of the cash flows, all the revenues, take out all the expenses, what's the cash flow worth today? I think with the assumptions that I have, I think that's worth $456 per share if they execute on it. So put all those together, combine all those together. I think that Tesla is worth $700 a share if it succeeds with the robotaxi autonomous network out there. And compared to what the shares are trading today, where are we today?
337. I just looked it up. So
a good double from where they are today. But again, it's got to be beyond just being a car company.
And so when you accounting for risk, when you're building a model like this, is that just how you're weighting, your cost of capital? How do you account for risk when you're building out a model like this?
Yeah, the cost of capital that I used for Tesla, bear with me 1 second as I kind of pull that one up for you. 9.72%. And again, Tesla is becoming a less risky company for people to lend money to because it's got $30 billion of cash on its balance sheet right now.
Mm-hmm.
Combination of equity and debt, blended average cost of capital of 9.7%.
So one of the key things with this podcast, I want to, anyone can be Kramer and say, buy this, buy that. But hey, it's where you're pulling your actual money. That's why we wanted to do a portfolio. It's showing conviction at any given moment. So, I would ask, do you currently recommend, if you'd feel comfortable saying this, to Tesla to 7 investor members? And is this a stock you own? I'm just curious where your current conviction is on the stock.
Yeah, well, before I say the answer to that, I would say there's a disclaimer. There's a big delta between $140 a share and $700 a share, right?
Yep.
That's purposeful. That's purposeful because Tesla has got a lot of pats in front of it. Mm-hmm. If Tesla shuts down all of its AI and says, too hard, I'm giving up, we're not doing the robotaxi network, we're not doing autonomous, then you probably sell the shares. It's probably vastly overvalued if you're just thinking of this as a car company. It's worth $140 a share just by selling some pretty sleek looking vehicles out there. It's just not an attractive business. It's too hard, too low a margin, too competitive. But on the other hand, Elon knows this. He's not just building gigafactories that are putting steel out there and molding them into vehicles. He's actually investing quite heavily in the data center piece of this. And he's preparing all of the vehicles to be these kind of recurring revenue generating, full self-driving software equipped, cars. And then also the robotaxi network was so important. So the risk of that, if you're investing in Tesla today at $335 a share, you assume that he's going to be successful and the stock can probably double again. I personally think Tesla is a buy at $330 a share. It's run up significantly because there is a de-risking of the uncertainty of getting regulations to work in its favor. And certainly Elon knows the importance of that. And that's why he's trying to be as influential as possible with the federal government right now on safety regulations for the highways. And I think that, there's a lot of other things too. There's a lot of other optionality. The Optimus robots, zero contribution to the model right now. Could he work something like that out? Yes. Elon's got a lot of irons in the fire, so to speak, that could incrementally work in his favor. But I think that in general, if you're investing in Tesla, you're doing it for one of two things. One, Elon is very smart and he makes good on his promises. And two, it's going to become an AI company successfully. It's not going to abandon these projects. It's going to stick with them. Elon has shown us time and time again, he's pretty much right most of the time when it comes to making technical decisions. I think that probably continues. And you got the right guy at the helm and you got the right projects that can add a lot of value to the share price today.
Yeah.